Hello and welcome to another update video about EGLD. EGLD is in the same structure that we discussed before, so there's at the moment no change to the overall scenario or structure. Still dealing here with a potential 5-wave pattern to the upside from the September lows. Okay, we have a wave 1 to the upside that peaked in, well, around the 20th of September. A wave 2 pullback into the October lows, then an aggressive rally, which however is not impulsive, so it has to be a part of a diagonal. Also, this wave 1 was more like a 3-wave move. So I see this all as an aggressive diagonal in which a third wave topped here in December, end of December. Now moving in a 4th wave to the downside here, okay? And yeah, that could be over, but it's way too early to confirm. We haven't even formed higher highs, higher lows yet. But I want to emphasize that this is a support area in which we would like the price to turn around from a 4th wave to rally in a 5th wave. And the 5th wave needs to minimally break above $78, but is likely going to get to something around $108, which is the next major fib level up there. At the moment, I have no confirmed low in place. At the moment, I'm inclined to believe that it's the white count that's playing out here, basically an extended correction. So the yellow count suggests the low could be in. The problem I have with that, and that's a big problem, is that this is some kind of a double bottom. And also the last move down wasn't strong enough. Okay, so could we have bottomed? Yes. Is it likely? In my opinion, not very much. Well, I shouldn't say that. I mean, we are in the support area. It's just that Elliott wave teaches us that double bottoms are not really reliable bottoming structures. So if we get like a 95-99% retracement, they typically do not hold in the end, okay? So it's a very, very likely WXY structure that's unfolding here, where we have a wave W to the downside here. No, it's a W because it's an ABC in 3 waves. Then we have 3 waves likely in the X wave, and we could come down in a Y wave. I guess I could label that as well as ABC, but it doesn't matter so much. It's just to highlight this could become an extended correction, and we could dip lower into the support area. No problem if we do that. It would all still be covered by the wave 4 support area. And I would really only start to doubt that this is still getting another high if we get a sustained break below 41.82. Then obviously we still have the $36 level left, but below 36, I don't have anything clearly bullish left on the chart. But this would be a crystal clear WXY structure. I mean, again, the wave W could have bottomed here. Then this is just a nice ABC flat that's forming here. A wave up in 3 waves, a B wave down, looks also corrective, overlapping price action, and the C wave could be unfolding now. Typical target for such a C wave in the white scenario, it's here the 100% extension level, and that's at $60. So that's the previous high. Therefore, I've got the green line there as a potential breakout point. Obviously, such a C wave can extend further, but it would be an extreme barrier that the price needs to get through. And I think if we get a sustained break above that level, it would already suggest that the yellow count could be unfolding. It will depend on the structure, yeah. So we will have to be a bit flexible there and have to basically, let's say, analyze the dynamic development of that structure as we go. But so far, yeah, again, it is possible that the low is in. I need to see further evidence to believe it. But in this situation, we have the support area, we have the fibs that we can use to find entry points if we want to trade this. And the pullback has already been quite substantial. In these situations, if really the price moves out of this box and you basically, let's say, scaled in and use the strategy that can be used with this method, like scaling into support, yeah, basically adding a little bit, adding a little more, adding a little more, adding a little more. When the price makes such profits available in a corrective rally, it might be wise to at least take some partial profits when it becomes evident that it only is a corrective rally, and then the market could still come down lower in a Y wave later without a problem, and you can just add a little more, add a little more. Yeah, that's, I think, what we are watching for at the moment. So the $60 level is a key level here that we have to watch, and a key breakout point. It's more like $60.50. And in terms of support levels, we still have $41.80 and $36. These are the levels that really matter. That's my update about eGold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.